In the world of trading, there are thousands of books on technical analysis. There are encyclopedias on chart patterns, volumes on candlesticks, and entire libraries dedicated to economic theory. But there is one book and one man who changed the landscape of trading forever, not by looking at the chart, but by looking at the trader. That man was Mark Douglas. And his philosophy, outlined in his masterpiece Trading in the Zone, remains the single most important psychological framework ever created for the markets. Why is it so important? Because Mark Douglas identified the fundamental tragedy of the trader. We are trying to use life skills to solve a market problem. In normal life, we are taught that if we want something, we can control the environment to get it. If we want to be on time, we leave early. If we want to build a house, we follow a blueprint. We can manipulate our surroundings to produce a specific outcome. So, when smart, successful people come to the market, they bring this mindset with them. They think, if I analyze enough, if I study enough, I can control the outcome of this trade. But the market is a unique environment. It has no walls. It has no beginning and no end. It is a stream of endless, chaotic opportunities. And most importantly, you have absolutely zero control over it. You can control your entry. You can control your exit. But you cannot control what the price does in between. When you try to control the uncontrollable, the result is fear. And fear is the mind killer. Fear causes you to hesitate when you should strike. Fear causes you to sell when you should hold. Fear causes you to see danger where there is opportunity. Mark Douglas taught us that the holy grail of trading is not a strategy. It is not an indicator. The holy grail is a carefree state of mind. It is the ability to trade without fear, without hesitation, and without the need to be right. It is called the zone. The zone is not a state of euphoria. It's not about feeling high or invincible. It is a state of radical acceptance. It is the peace that comes when you finally accept that you don't know what is going to happen next, and you realize that you don't need to know in order to make money. In this video, we are going to deconstruct the Mark Douglas framework. We are going to break down the 5 fundamental truths that allow you to enter the zone. We are going to stop trying to conquer the market and start trying to conquer ourselves. If you have ever felt the pain of a losing trade, if you have ever felt betrayed by the market, this video is the antidote. Chapter 1. The gap between analysis and execution. Let's start with the most common frustration in trading. I call it the gap. Have you ever looked at a chart and seen a perfect setup? You identified the support level. You saw the bullish engulfing candle. Everything aligned. But you didn't click the button. You hesitated. You thought, maybe I should wait for one more candle. Or maybe the news will be bad. And while you were thinking, the price rocketed up without you. You watched it go exactly where you knew it would go. Or the opposite. You were in a winning trade. It was halfway to your target. Suddenly, you felt a wave of anxiety. What if it reverses? What if I lose this profit? So you closed it early. You banked a tiny profit. And then you watched the price continue to your original target, leaving thousands of dollars on the table. This is the gap. It is the distance between what you know, analysis, and what you do, execution. Why does this gap exist? Mark Douglas argues that it exists because of perception. You are not trading the market. You are trading your beliefs about the market. I want you to imagine a white canvas. The market is a blank screen. It is neutral. A candlestick is just a representation of data. It is not good or bad. It is just information. But you project your internal state onto that canvas. If you have lost money recently, you project pain. You look at a setup, and instead of seeing opportunity, you see threat. Your brain says, this looks like the trade that hurt me last week. So you hesitate. If you have made money recently, you project euphoria. You see easy money. You ignore the risks. This is a biological mechanism. Imagine a child who gets bitten by a dog. From that moment on, every dog he sees is a monster. It doesn't matter if the next dog is a friendly golden retriever. The child's brain associates dog with pain. The child perceives a threat where none exists. As a trader, you are that child. The market has bitten you. It has taken your money. It has hurt your pride. So now, every time you see a setup, the dog, your brain screams, danger. You are reacting to your past trauma, not the present reality. This is why you can be a brilliant analyst and a terrible trader. Analysis is done by the rational brain. Execution is done by the emotional brain. And if the emotional brain perceives a threat, it will sabotage the execution every time. To trade in the zone, you must clean the canvas. You must learn to see the market without association. You must learn to look at a setup and see only the setup, not the ghost of your last loss. I want you to pause and reflect for a second. Be honest with yourself. When was the last time you knew a trade would work, but you didn't take it because you were scared? When was the last time the gap cost you money? Scroll down and comment the word hesitation if this is your biggest struggle right now. Let's see how many of us are fighting the same battle. Chapter 2. Accepting risk, the foundation. How do we close the gap? How do we stop hesitating? It starts with the most misunderstood concept in trading, accepting risk. Ask any trader, do you accept the risk of this trade? They will say, yes, of course. I put my stop loss at $100. But they are lying. They haven't accepted the risk. They have simply acknowledged the risk. There is a massive difference. Acknowledging risk means you know you could lose. Accepting risk means you are at peace with losing. Here is the test. If the trade hits your stop loss and you feel emotional pain, if you feel angry, sad, or betrayed, then you did not accept the risk. Why? Because emotional pain comes from unmet expectations. You feel pain because you expected to win. Deep down you thought, I know there is a risk, but I'm smart, so this trade will work. When it doesn't work, your expectation is shattered, and you feel pain. Mark Douglas teaches us that to trade in the zone, you must eliminate the expectation of winning. You must reach a state where you are truly indifferent to the outcome of any single trade. I want to give you a metaphor, the casino owner. Imagine the owner of a Las Vegas casino. He has a blackjack table. He knows that the house has a mathematical edge, let's say 5%. A gambler walks in and bets $1,000. The gambler wins. The casino loses $1,000. Does the casino owner get angry? Does he flip the table? Does he feel like a failure? No. He smiles and gives the gambler the chips. Why? Because he has truly accepted the risk. He knows that losing that hand is just the cost of doing business. He knows that he doesn't need to win every hand to make money. He just needs to play the game long enough for his edge to work. The casino owner is in the zone. He is not emotionally attached to the outcome of the spin. He is attached to the math. As a trader, you must become the house, not the gambler. The gambler is obsessed with the outcome of this trade. He needs it to win. He prays. He sweats. The house is obsessed with the process. Did we execute the edge? Yes. Then the outcome is irrelevant. When you truly accept risk, you don't fear the market. Why would you fear something you have already accepted? If I accept that it might rain, I bring an umbrella. I don't scream at the clouds when the water falls. To enter the zone, you must pre-accept the loss. Before you click buy, look at your stop-loss amount. Let's say it's $200. Visualize that money leaving your account. Can you look at that loss and say, I am okay with this. This is the fee I pay to find out if the trade works. If you can say that and mean it, you have removed the power of the market to hurt you. You have taken the teeth out of the dog. Chapter 3. The 5 Fundamental Truths. To cement this mindset, to make it your default operating system, Mark Douglas outlined the 5 fundamental truths. These are the pillars of the professional mind. If you memorize these, if you internalize them, you will never trade with fear again. Truth number 1. Anything can happen. This sounds obvious, but you don't believe it. When you see a perfect pattern, you think, this has to work. No, it doesn't. A huge hedge fund could sell $1 billion right now and crush your pattern. A war could start. The power grid could fail. There are millions of variables you cannot see. When you truly believe that anything can happen, you are never surprised. And if you are never surprised, you are never hurt. You stop demanding that the market obeys your drawing. Truth number 2. You don't need to know what is going to happen next to make money. This is the liberator. Most traders think they are in the prediction business. They think they get paid for being right. Douglas says, "You are in the probability business." The casino doesn't know who will win the next hand. They still make billions. You don't need to be a prophet. You just need a statistical advantage. When you stop trying to predict the future, the pressure vanishes. You are free. Truth number 3. There is a random distribution of wins and losses. Let's say you have a system that wins 60% of the time. That is a great system. You will be rich. But you don't know the sequence. Out of 10 trades, you will win 6 and lose 4. But the order could be lose, 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 win, 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 win. Those first 4 losses feel terrible. An amateur will quit after the 3rd loss. They will say, "The system is broken." The professional knows it is just random distribution. He knows the winners are coming if he just keeps pulling the lever. He doesn't judge the system on the last trade. He judges it on the last 100 trades. Truth number 4. An edge is nothing more than a higher probability of one thing happening over another. That's it. It's not a guarantee. It's not a crystal ball. A head and shoulders pattern doesn't mean the market will reverse. It just means that historically, in this situation, it reverses slightly more often than it continues. It is just an indication of odds. When you see an edge as just a probability indicator, you stop attaching your ego to it. You stop feeling like a genius when it works and an idiot when it doesn't. Truth number 5. Every moment in the market is unique. This is the deepest truth. You see a pattern on the chart today that looks exactly like a pattern from yesterday. Yesterday it went up. So you think, it looks the same, so it will do the same. Wrong. The pattern looks the same visually, but the people trading it are different. The volume is different. The context is different. Every moment is a unique snowflake. Just because the setup worked last time means nothing for this time. The amateur brings the baggage of the past into the present. It worked before, it must work now. The professional treats every trade as a fresh, independent event. He doesn't get cocky because he won yesterday. He doesn't get scared because he lost yesterday. He is present. He is in the now. These 5 truths are the armor of the mental game. They protect you from the illusion of certainty. They allow you to look at the chaos of the market and remain calm. Because if anything can happen, and if you don't need to know the future, and if losses are random, then what is there to be afraid of? Nothing. The fear dissolves, and all that is left is execution. Chapter 4. Thinking in Probabilities. We have laid the foundation with the 5 truths. Now we need to build the structure. We need to understand what it actually means to think in probabilities. This is the hardest shift for the human brain to make. We are wired to think in right versus wrong. We are wired to think in cause and effect. Probabilistic thinking is counterintuitive. It is alien to our biology. Imagine you are flipping a coin. It lands heads, 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 heads. Your brain screams, "The next one has to be tails." Or, "This coin is magic, it's heads forever." But the coin has no memory. The odds are still 50 to 50. Your brain tries to find a pattern in the noise. It tries to predict the next flip based on the last flip. To trade in the zone, you must disconnect the outcome of the last trade from the expectation of the next trade. They are independent events. I want to introduce you to the sample size shift. The amateur judges their success trade by trade. I won today, so I am a good trader. I lost today, so I am a bad trader. This is an emotional roller coaster. You are happy, then sad, then happy, then devastated. The professional judges their success in blocks of 20 trades. This is a technique Mark Douglas championed. Commit to taking the next 20 valid setups without judgment. Don't look at the P&L after trade number 1. Don't get excited after trade number 3. Just execute the block. At the end of the 20 trades, look at the result. Did you make money? Yes. Then the edge works. Did you lose money? Yes. Then the edge needs tweaking. This shift is powerful because it silences the ego. You can't judge a probability on a sample size of 1. If you flip a weighted coin once and it lands on the losing side, does that mean the coin isn't weighted? No. It just means you need to flip it more. I want to use the metaphor of the slot machine. Imagine you own a slot machine. You know it pays out 90 cents for every dollar put in. You have a 10% edge. You pull the lever. You lose. Do you get mad? No. You pull the lever again. You lose. Do you get sad? No. You pull it again. You win a little. You pull it 1,000 times. You know you will be rich. The problem with most traders is that they pull the lever once, lose, and then walk away saying, "This machine is broken." Or they pull the lever, win, and think, "I am a slot machine god. I can control the machine." Thinking in probabilities means accepting that variance is real. You will have losing streaks. You will have winning streaks. Neither of them means anything about you as a person. They are just the distribution of math. When you truly internalize this, the need to be right disappears. You realize that being right on a single trade is just luck. Being profitable over 20 trades is skill. This concept, the sample size shift, is often the breakthrough moment for struggling traders. It changes the game from gambling to business. If you want to master this probabilistic mindset, make sure you are subscribed to the channel. We dive deep into the math of psychology every single week, and I don't want you to miss the next lesson on risk management. Click that button now. Chapter 5. Eliminating Emotional Pain. If you think in probabilities, you achieve the ultimate goal, the elimination of emotional pain. Why does trading hurt? Why do you feel that pit in your stomach? Fear comes from expectation. If you expect the market to do something, and it does the opposite, you feel pain. I expected it to go up. It went down. I am hurt. But what if you change your expectation? What if you expect nothing? Or rather, what if you expect anything? Mark Douglas says, "When you are in the zone, you have no expectation of what the market will do. You only have an expectation of what you will do." This is the carefree state of mind. It's not reckless. It's not, "I don't care if I lose money." It is, "I don't care how the market gives me the result. I just trust that it will." Think about a professional golfer. He steps up to the tee. He swings. He hits the ball into the bunker. A bad shot. Does he throw his club? Does he scream? Does he give up on the tournament? No. He has a moment of frustration. Sure. But then he wipes it. He walks to the bunker. He assesses the lie. He swings again. He forgets the bad shot instantly. Why? Because he knows that if he carries the anger of the last shot into the next shot, he will ruin his game. He must be fully present. He must be in the now. The zone is the state of pure presence. Fear lives in the future. What if I lose money? Regret lives in the past. I shouldn't have taken that trade. The zone lives in the present. What is the market doing right now? When you are in the zone, you are not trading your P&L. You are not trading your mortgage payment. You are trading the information in front of you. Price is moving up. I buy. Momentum is slowing. I sell. It is fluid. It is reactive. It is unburdened by the baggage of your history. The moment you feel pain, you know you have fallen out of the zone. Pain is the signal that you had an expectation that the market violated. When you feel that sting, stop. Ask yourself, what was I expecting? Why did I think I could control this? Release the expectation. Return to the probability. So how do we get there? How do we live in the zone? It starts with becoming the observer. You have to stop identifying with the trade. You are not the trade. You are the manager of the trade. You are not the P&L. You are the executor of the system. When you watch the market, imagine you are watching a river flow. You don't get mad at the river for flowing left or right. You just watch it. You look for a safe place to put your boat in. If the current is too strong, you wait. If the current is smooth, you ride. The zone is a place of radical responsibility combined with radical detachment. You are responsible for following your rules. You are detached from the result of any single trade. Sounds like a paradox, but it is the key to freedom. Care about the process. Don't care about the outcome. When you achieve this, trading becomes boring. And that is the secret. The zone isn't exciting. Gambling is exciting. The zone is quiet. It is peaceful. It is the feeling of a job well done. The market can only hurt you if you give it permission. If you give it the power to define your self-worth, it will crush you. If you revoke that permission, if you decide that you are a professional executing a business plan, the market cannot touch you. You become bulletproof. You stop fighting the tape. You stop fighting yourself. And you finally, truly start to trade. Remember the 5 truths. Anything can happen. You don't need to know the future. Wins and losses are random. An edge is just a probability. Every moment is unique. Live by these truths, and the zone will open its doors to you.